Good evening and welcome to this session of the live learning classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. So here we are again with a new topic today. Good evening, which is acceptance of deposits by companies. Before I greet you all, let us begin with our usual invocation. Sahana bhavatu, sahano punaktu, sahaviryam karvavahai, tejasvinavadhitamastu. Ma vidvishavahai. Om Shanti Shanti Shanti. So once again, good evening, and I'm happy to see so many of you have sort of logged on, and others are, I'm sure, logged on, and we are not putting a comment there. That's not a problem. So thank you, Mr. Kavin, for saying waiting for an interesting class. We have a lot of people: Komal Almas, Divya Kumari, Mohammed, Shankaran sir, Vanakkam, Ajay Chauhan, Santika. Maybe I'm pronouncing it wrongly. Maybe it's Santika, Hardik, Kadambari Bhatt, Manohar Yadav, Subham Gupta, Ramja. Welcome, sir. Radhe Radhe. Madhav Tiwari and Sanjana Ben, Chauhan, Jennifer. Welcome. Neha and Nagaraju. Oh, a lot of people here. Ruturaj. All the Mohammad Akif again. Good evening, Jalaj. Mukteshwari, Ramadevi, Surendran, Tunishka. Wow. Rito Banerjee, Neha Harge. I'm reading it again and again. Let's not sort of spend more time on this. Wow. Meaning of section 56.1 subsection 2 given in page number 4.37. This may have to wait to Nishka because today I'm starting a new topic. So I may have to push on with the old topic. And that too, you're asking from a very, very old section 56.1. So kindly excuse me. If I get time in the fag end of the class, I'll do that. At the end of the class, if I get time, I'll do that. Not now. Okay? Good. So, I don't have that material with me. During the break, I'll get it. I'll look at it. And again, you don't say 56.1. Put a question which says what you didn't understand in 56.1. Exactly which part of 56.1 you don't understand. Because 56.1 itself is pretty big. You tell me exactly what you don't understand. Such a question will be answered, definitely. But simply saying explain, that too when a new topic is started, not possible. So, but don't worry. If I get time, I will try. But I don't know, what is it you don't understand? If you don't understand the whole subject, I can't teach the entire subject again for you. Got it? You ask a specific question. Sir, what is this? Why is it like that? I will reveal you the answer. That will also show effort on your part. The student also should take effort to understand. Only when they don't understand, they should ask specific question. As, hey, sir, this I don't understand. Then the teacher can clearly explain that and proceed with the knowledge sharing. Otherwise, it will become like repeat, waste of time for everybody. Let's not do that. Okay. Now, coming to the topic for the day, it is acceptance of deposits by companies. Friends, the way the act is structured now, you will see that you are following the balance sheet. I'm not joking. Think about it. Forget the preliminary topic, incorporation. Then we came to prospectus and share capital and debentures. So share capital is the first in your balance sheet, in your Schedule 3 balance sheet. On the liability side, the first item that you see is share capital. Then reserves and surplus. Together that forms owner's equity. We saw all that. Allotment of bonus shares, etc., etc. Then you have liabilities. That's a non-current liability, current liability. Now we are seeing non-current liabilities. We saw debentures, one of the major non-current liabilities. Now we are seeing acceptance of deposits. Again, another non-current and current liability. Depends. See, it's a liability, outside liability. So we are now seeing first time the law relating to outside liabilities. Liabilities that are due to outsiders. So that those liabilities, what is the law relating? So we saw debentures already. Now we will see what is that? Acceptance of deposits. Later on, we will see charges. Generally about loans, how charges are created, how security is offered, will be done in. So that way, we'll complete almost the entire liability side of Schedule 3. Okay, it will be like that, is what I feel. Obviously, the chapter is chapter 5 of the Companies Act, which is also chapter 5 of your material. But I strongly discourage following my lecture page by page in your board of studies material. I strongly discourage that, Mr. Devraj. If you do that, you will not understand what I'm saying. And believe me, the material will be covered. Not necessarily, but maybe in that order, not necessarily in that order. Some topics may even be skipped by me, not because it is, I don't know, or because it is not, but because it's too dry and not relevant from the exam point of view. So please do not, uh, please do not do that. But nevertheless, I'm going to go through the Board of Studies material, chapter 5. Okay. Also, the rules also are there. Now, this topic will be understood under these broad heads. So, we will first begin with understanding what is a deposit. What is a deposit? Definition of deposit. Section 2, subsection 31. Then, these rules relating to acceptance of deposits are divided into two concepts. One is acceptance of deposits from members. Private limited company can accept deposit only from members. So acceptance of deposits from members. Also acceptance of deposits from public. Okay, so 73 deals with acceptance of deposits from members. 76 deals with acceptance of deposits from public, but many of the rules and section are common. So many of the provisions are common. To the extent they are common, we will refer to 73 also. Okay, when I come to that, you will understand it better. So we'll talk about the rules relating to acceptance of deposits. I may not cover the entire rules in its entirety, but I will cover the major portions, which are 100% important from the exam point of view. I will cover, which is important, I will cover. Then, of course, the most important part of acceptance of deposits, which is repayment of the deposits. And what is the consequence of non-repayment? What happens if the deposit is not repaid? Also penalties, etc., as usual. So this is the broad idea. This is contained in your institute material, chapter number 5. Do not follow it. Do not keep the material open. Look at the video. Don't do that. Listen to me fully. Aram se, then go to the material. Use my PowerPoint also. Then later on you do a comparative study. After all, this PowerPoint presentation is being given to you almost immediately or a little bit after the class is over. So when you're doing revision, that will be the best way. Keep my material, keep the Institute material, keep my PDF, maybe on your tab or something. Keep the material open or switch between the two. Do it at your leisure. Don't do it now. Yeah. No. The word deposit will be defined very shortly. Before that, we will see there are two types of deposits. We have secured deposits and we have unsecured deposits. What is the meaning of? We already saw secured debentures and unsecured debentures. Unsecured debentures were also called naked debentures. So, secured deposits are those which are fully secured by creating a charge on tangible assets. See, here we go. This is something that I will teach you only in next week. Inshallah, when I will teach you registration of charge, I will tell you what a charge is. So instead of explaining this, I will tell you in simple words. Secured debentures means there is a security. An asset has been offered as a security. That's all. If you ask me, sir, what is a charge, sir? Then I will tell, a charge is created. Listen to me now, you will understand. Listen to me, then you will understand. If you look at the institute material, you will not listen to me. So listen to me now. Okay. If you keep searching for this in the institute material, you are wasting your time, Baba. Don't do that. Okay. I know some of you are doing that. That is why I'm saying don't. Okay. Now, when the company offers an asset as a security for a loan, a charge is created. When debentures are issued, you take a tangible asset. What do you mean by tangible asset? Asset that you can see, asset that you can touch, asset that you can hear. I mean, assets you cannot hear because they are jadam, but whatever it is. See, these are assets that you can touch, feel. They are susceptible to the five senses, especially the sense of vision. They are capable of being seen by the eye. Most of the time, Tangibility is usually visual. When you don't believe in God, many of you may not believe in God. Why? Because you can't see Him. You will simply tell me, Mr. Srikant, how do I, or why, Mr. Srikant, why, how can I believe in something that I cannot see? Okay, yes, God is intangible, but tangible means that which you can see, touch, feel, hear, taste. The five sense organs can see when it is tangible. So, such an asset, examples, land, building, machinery, motor vehicles, furniture, these are all tangible. Stock in trade, tangible. Okay. But you will get into little trouble when you come to book debts. Book debts, are they tangible or intangible? They are an idea. Na? It's a right to receive money. So this tangibility itself is a bit of a confusion. But whatever it is, when the so here they are very clear. Here they are very clear. The asset should be tangible. So the deposit should be secured by the security of a tangible asset. Then only it is secured. And that too fully. That word fully is very, very important, Baba. Okay, you might get a question in the exam also. That is why I'm stressing a little fully. Suppose deposits are partially secured. Partially. Value of deposit is 20 lakhs. 15 lakhs only security has been given. Then it is unsecured. Means where there is partial or no security is made available. So, to understand it better, where security is full value of the deposits, full amount of deposits, a tangible asset has been offered as security. Full security is made available, secured. If partially it's offered as security or asset is offered as security or no security is given, then it is unsecured. This goes against general awareness. Because suppose in your institute material, you will find at the end, objective type, you will find one question is there where they will ask you 20 lakhs is the amount of deposit. Company has given security for 15 lakhs. Is it secured or unsecured? They will ask. Answer is unsecured. Okay, and you'll be tempted to 15 lakh security is there. No. If it is not fully secured, if the amount of deposit is not covered by the value of asset, it is unsecured. Okay. Just wanted to drive home this point, which I thought may be of relevance to you. So I am moving on. Now we come to definition of deposit. This is the definition of deposits to subsection 31. Very, very loose definition, not that loose. Loose, L-O-O-A-C, loose. That is, it is not tight. It opens out. Simply it says, or I could even say it is a very wide definition. Very wide. According to section 231 of the Act, the term deposit includes. So that includes them itself makes it wider. Suppose they had used means. That means what? Whatever is stated here, that is the definition. Whereas they are saying includes. That means they are going to give you only examples. Other things can also come. So they are giving examples like includes any receipt of money by. Friends, see the word any. Any is a dangerous word. Any is wide. Any receipt of money by way of deposit or loan or in any other form. Luckily for us, any receipt of money is qualified by the words by way of deposit or loan. So at least that any receipt of money is given a description. They are saying any receipt of money by way of deposit or loan or in any other form. See, again they are opening it up. Or in any other form. Any receipt of money in any form by a company, but does not include such categories of amount as may be prescribed in consultation with the Reserve Bank of India. So your knowledge of this definition is of no use unless you know what are the categories of amounts. Actually, English is bad, but sorry, that's the way it is in the Act. What are those amounts which are prescribed in consultation with the RBI, meaning what are those amounts which are not deposits? So this definition is complete. Your knowledge of this definition is complete only if you know what are the amounts which are not deposits. See, they have opened up the floodgates here. What I mean is, have you been to the dam? You have seen a dam in full flow when the water is flowing through the sluice. See what they'll do now? The dam is actually a wall. It's a wall to hold the water on the other side. But sometimes when it's raining, as it is no raining in my part of the world, if it starts raining heavily, then the dam cannot hold the water. So what they will do, they will open the sluice. So here what they have done now, they have opened everything and water is flowing out. They're saying everything includes any receipt of money, which means what? Hey, loans are covered here, debentures are covered, bank loans are covered, central government grant covered, everything is covered here. So long as you are able to bring it under the category of deposit or loan. And then this or in any other form is there. So any receipt of money by any company in any other form. Okay. So very dangerous definition. So you might ask me, why are you wasting our time, sir, telling all these things? I will tell you. From the exam perspective, the topic which we are now going to study, amounts not considered as deposit, very, very important. Even in this topic, there are some sub-points where I will shout and I will say, hey, this is important, this is important. When I am doing that, please concentrate. Instead of searching in the material whether I am covering, don't worry. What I am covering and saying important, know it, because that is important. Because these are areas where, whether in practice or in service, your knowledge will be practically used. So, definition of deposit, open. Any receipt of money by way of deposit or loan or in any other form by a company. That means everything, yeah. But does not include such categories as may be prescribed in consultation with the RBI. So, in consultation with the RBI, the Ministry of Corporate Affairs has prescribed these amounts. These are prescribed in the rules. Now, if somebody like Devraj, very, very interested, no, sir, I need to know where, sir. If you don't tell, I will get angry. Then, Devraj, you have to come to page number 5.4. Amounts not considered as. This is rule 2.1c. As per your institute material. Hai. So you just come there. But don't follow there. You follow. In my screen, it will be easier. But very, very important. In your institute material itself, it comes to 1, 2, 3, 4, 5, 6, 7, 6.5 pages. But we will cover it in slides. I will explain. Some are important, some are not important. Okay? And where they are important, I will give you more inputs. First, we are going to see certain amounts which are not considered as deposits. First, from central government or state government, any amount received from central government, not a deposit. State government, not a deposit. Or from any other source whose repayment is guaranteed by the central government or a state government. For example, you may be getting some loan from an agency, from a government agency. That amount may be guaranteed by central government or state government, exempted. Or any amount received from a local authority. Just like you have central government and state government, you also have local authorities like corporation, municipal corporation, panchayat, etc. So these are also covered. So you might get some money from them. See, you may be getting some grant from central government for doing some, thing, etc., etc. Okay. Before we go, Regala Sampatrao is asking, does it include shareholders' money? No. Luckily, they have clarified now. Receipt of money by way of deposit or loan. So, or in any other form is a general statement. Okay. Or in any other form is a general statement. But, see, this or in any other form is not needed. But still they have put or in any other form. But that or in any other form should be read along with deposit or loan. Got it? Why I'm saying this? I'm applying the rule of ejusdem generis here. I'm applying the rule of ejusdem generis. Specific terms are followed by a general term. Deposit, loan, any other form, general term. Now, the rule of ejusdem generis, the rule of ejusdem generis, EJUSDEM generis. It is there in your, if interpretation of statutes is there in your syllabus, I don't know. If it is there, you will find it there. If it is not there, I am teaching you. Ejusdem generis is where general terms, specific terms, specific words are followed by general words. Then the general word should be read as if belonging to as if. So this any other form is a general word, any other form. But it is coming after what? Deposit or loan. So deposit or loan in the nature of outside liabilities. So shareholder ka, owners ka equity na, shareholders money is not covered. Only outside liabilities are covered. Have I explained? Not covered. But the word any other form is dangerous. The word any other form is very dangerous because it leads to the feeling that even shareholders' money could be covered. Okay, coming back to the definition, amount received from central government, state government, etc., from any local authority, statutory authority constituted under an act of parliament or a state legislature. So any other authority constituted under the central parliament or state legislature. Means if it has the color of government money, exempted. It is not a deposit. So you need not include it for calculating deposits. Okay. From foreign governments, foreign or international banks, multilateral financial institutions, etc., subject to the provisions of Foreign Exchange Management Act. So, for example, you might receive a loan from a foreign government or from a foreign or international bank, multilateral financial institutions, like, for example, Asian Development Bank, International Monetary Fund. These are all there, na? You might get from them. So, such amounts are not deposits. See, why they are giving like this line by line, they are exempting, because they opened it now. They said any amount, any money, any receipt of money, they opened now. So now they have to one by one close. So first they are closing government, then they are closing foreign government, provided it comes under FEMA. See, under Foreign Exchange Management Act, money can come only under, money can come from abroad only in 3 ways now. When you come to final, when you study FEMA and all, and as more so when you become a member of our institute and etc., you will know more about it. But basically, foreign exchange can come in only as sales or gross receipts, or it can come in as loan, or it can come in as equity. Only these 3 categories pass. And one more nefarious category is there. That is called advance. Advance for supply of goods or services. But that again is only an advance for supply of goods or services. So initially you may take that advance. But remember, God and RBI are watching. If you don't supply the goods or perform the service and close it by raising a bill, you are in trouble. You are in deep trouble. Because at the time of getting the money, the bankers also will cheat you. They will say, you want to bring that money now, I will get it. You just put it as advance. But they won't bother to know when that advance is getting closed. Later on, 6 months or 9 months down the line, the same rascal bank will come because he will get an RBI inspection. Now, he will write a nasty letter to you saying, why you have not closed this advance? When will you raise the bill? Now, you will go back to him and say, sir, this is meant for my salary and all I have taken. How I can raise a bill? And I don't know what you will do. You will have penalty like that, they will say. So never listen to bankers when it comes to Foreign Exchange Management Act. Always, if you are a chartered accountant, refer to the RBI circulars. If you are a member anyway, but if you have doubt, then experts are there who know the subject. Consult the practitioner who knows the subject. He will. If you are a member in service, you are more into finance and banking and all and investment banking, you don't know foreign exchange, no problem. There are other people who know. Come to them and ask what the doubt, they will give you. Okay. Now, as a loan or facility from any banking company or from State Bank of India or its subsidiary. So, bank loans are covered in one shot. Loan facility from any banking company. Specifically, they are having State Bank of India or its subsidiary banks or from notified banking institution or from any cooperative bank. So, these are all clear. So, any loan received from these entities, not a deposit. As a loan or financial assistance from PFI, Public Financial Institution. Public financial institution, there is a list of PFIs now. Well known are there IDBI, ICICI, NABARD, SIDBI. These are all well known. LIC, the 4 general insurance companies, they are all public financial institutions. Okay, so PFIs are there. Now, PFIs, if you get a loan or financial assistance from them, that is there. Okay. GST practitioner. That's all. That is my answer to you. Sir, what GST practitioner? Yeah, as a practicing chartered accountant, I'm entitled to practice for GST also. Okay. Suman Goyal makes a very valid point. When this law was passed in Parliament, Sumanji, SBI had subsidiaries. Okay. Aaj though, no, as you rightly say, those five subsidiaries, I think, I forget. I think it was State Bank of Travancore, State Bank of Patiala, State Bank of Mysore, State Bank of Jaisalmer, I think, and something. One more. And five, I forget the five. Five were rolled back into the SBI itself. Absolutely. You're right, Suman. The SBI has no, I think. Okay, since Suman Goyal, you are so aware of State Bank of India and its subsidiaries, can you tell me what was the original name of State Bank of India before it became State Bank of India after bank nationalization? Before that, what was the name of State Bank of India? And why were these subsidiaries at all there? When the government of India, rightly or wrongly under Mrs. Indira Gandhi, decided to nationalize the banks, the State Bank of India came into existence. The State Bank of India is older than independence. What was the State Bank of Hyderabad? Now, what was the original name of State Bank of India? Neha, I cannot explain first point again. You ask me doubt, I will explain. First point again cannot be explained. It's right there in front of you. You can read English now. Central government, state government. Any amount received from any government is exempted now. That's all. Nothing great about it. Any amount received means grant, loan, or somebody else may give you a loan. Government may guarantee it. Exempted. See, what they are doing here is they opened up the definition. Now they are closing it. They are giving specific items and saying, this is not deposit, this is not deposit, this is not deposit, like that. So like that, we are exempting. Okay. So here is a GK question I asked you. What was it called? Correct. Rama Devi gives the correct answer. That is Imperial Bank. Suman also gives the right answer. Imperial Bank. See, the original Britishers bank, now it was called Imperial Bank. Imperial Bank. That Imperial Bank was operating post-independence also. Now, when banks were nationalized, this huge, it was a huge bank at that time itself. Remember, it was the Imperial Bank, the Britishers' bank. It became the State Bank of India, which is why State Bank of India has 200-year-old buildings, 100-year-old buildings and all. In its history of State Bank of India is older than Indian independence. It was not formed after that. Correct. Imperial Bank. See, when the Imperial Bank was nationalized into State Bank, there were many banks belonging to the princely states. Take all these guys. State Bank of Hyderabad, Nizam. State Bank of Travancore, Maharaja of Travancore was there. Like that. State Bank of you take it out. All these guys were banks run by princely states. So when these were nationalized, they were given the respective names. State Bank of Hyderabad, State Bank of Travancore, like that. So later on, these subsidiaries were found to be very costly and unnecessary. So they have been rolled into thing. There is no consequent thing. But under the General Clauses Act, when something is appearing, which is not so now, General Clauses Act says it shall be read as if subsidiary is not there, like that. Okay, so this is just for information. See, certain information may not be relevant to you from the exam perspective, but may have some relevance in general way. See, when you tell this now, people will be very happy. Okay. So any amount received from government, etc., will not be considered as deposit for these rules. Okay. Moving on. Against issue of any commercial paper or any other instruments issued in accordance with the guidelines or notifications issued by the Reserve Bank of India. Okay. Now, commercial, thank you, Suman, for such deep and encyclopedic knowledge on State Bank of India and its subsidiaries. And you've also given an acronym, BHIM PST. Okay, thank you. I will remember that also. Okay. So now the point here is, what is commercial paper? See, for conducting law paper, I have to teach you theory on finance also. Nice one. BHIM EST. That's a nice acronym. Thank you. Learned something new today. Thank you, Vijay. Thank you, Vijay. Now coming to the point, commercial paper. See, commercial paper is short-term funding. When there is a lot of need for short-term funding, things like from 1 day to 90 days, you need money, you have to rotate. Now, that is called commercial paper. Now, commercial paper is issued by mostly banks and financial institutions and all. But corporates, companies can also issue. But CP issuing is not easy. You have to get it rated, credit rating is needed, then a lot of stiff controls are there. And the commercial paper cannot be for 1 crore, 2 crore. It will be huge amount. Because one commercial paper would be 50 lakhs, 25 lakhs, like that. It's like a pro note, yeah. So pro note signed by the company, it is tradable. There is a market for commercial paper. It's where they'll buy and sell commercial paper. Basically a short-term bond. Simply stated, commercial paper is basically a short-term bond, like less than 1 year bond, where so many days it will go. The interest rates are a little higher, but quickly it will be closed. And the company issuing commercial paper should be very, very creditworthy. It should be extremely creditworthy. Okay. So those commercial papers are debt, but not deposit. That's all. Intercorporate deposits not covered by deposit rules. When one company gives money to another company, whether by way of loan or deposit, it will not be governed by these rules. See, at the end of the day, what does it mean? Yeah? You see the balance sheet. Share capital out. Don't go there, upper limit. Come below. Start seeing the liabilities. Now you have to start adding. So to find out how much is the amount this company has taken as deposit, then you have to go for central government, state government, chode, foreign government, chode, like that. So all this will be removed. So intercorporate deposits, finally, what is left only will be treated as deposits. Okay. See, they are trying to ensure that company will not accept deposits without complying with the rules. So they are trying to bring everything into the picture and saying, if you take any money from anybody, it will be treated as deposit. Exemption. See, my voice breaking, I can do nothing about it. Pray to God and listen to me. I'm also praying to God. You have to bear. And it could be your side or my side also. To my knowledge, it is not my side. So by mentioning it to me, I have been ignoring such comments. Once I'm answering it, nothing can be done by me. What I'm doing is the only way we can do this. Okay. So intercorporate deposits are not deposit. Intercorporate loans means amount received by a company from any other company. Call it what you will. Also, please note this. Share capital is not covered, but share application money is not share capital. Na? Technically, no, I know voice is breaking. I cannot do anything about it. Understand my predicament. I have no control over this. If at best what I can do, I can stop talking. Is that what you want me to do? So I'm waiting for that technical person to tell me that my voice is not okay. Till such time, I cannot do anything about it. Kindly bear with me. If you want, I will apologize to you because I'm doing my best to teach. But the technical part, I cannot do anything. So kindly bear with it. If you feel it's very difficult, what to do, you tell me. Okay. Also, you check your connectivity, check it out. Because sometimes I find it's localized, that other students are able to hear me well. One student is not able to hear. We can't take such complaints. Please bear with me. This is the nature of the technology we are using. I'm doing my best to kindly help. Yeah, HNA can issue, but are we really worried about that, Sampath Rao? Here we are talking about companies. So don't waste your time on worrying about who can issue CP. When you come to finance topic, there you worry about this. In this topic background, whether a HNI can issue is not relevant for us. Okay. Yeah, HNIs can. Again, if they go through the rigorous mode of RBI and all, they can. So they have huge surplus now. They can put it in the call money market. Yes. But that's very, very complicated. If you want to study that, do it, but not relevant for this topic. See, Suman Goyal says voice is perfect and clear. So please do not disturb the class. If you think the voice is not audible, karma, what to do? My karma, your karma, that I am unable to talk to you. My karma, what to do? Okay, leave it. My humble request to you. Now, going on. So, share capital not covered. We already saw that. Share capital, anything to do with shareholder, not covered. But the share application money, pending allotment, in those days, the share application money pending allotment, we don't know where to put it. In the old balance sheet format, there was no space. See, where to put it? Should I put it under share capital? No, because it has not been allotted. Till it is allotted, it is only amount due to the applicant. Till it is allotted, it is only amount received from the allotment. See, it is only to cover this, sir, that they have said any other form. Are you able to understand? Because you can argue, sir, share application money is not loan, sir. It is not deposit, sir. Then I will ask you, is it share capital? Is it share capital? No. Till it is allotted, it is not share capital. So till such time it is allotted, it is hanging. It is neither share capital nor what to do. So technically, puristic view, my view is that till it is allotted, it is debt. It is unsecured loan. My view. In those days, when the old balance sheet format was there, my view was that that amount of share application money pending allotment should be shown under unsecured loan. Okay. Institute had a guidance note. Even now it is there. Guidance note. Where they said share application allotment should be shown. See, now listen to me. This is a very funny way. Share application money pending allotment should be shown in the balance sheet below share capital. Below share capital. So I asked, so does it come in reserves and surplus? No, Mr. Srikanth. It comes below share capital, above reserves and surplus. Below, where is that space? Yeah. Below share capital, there is reserves and surplus only. No, it's not coming in reserves and surplus, sir. It comes above reserves and surplus. So, see, just as a matter of interest, in our ancient, in Ramayana, you will hear the story of Vishwamitra. Even Mahabharata is there. Vishwamitra was a famous Muni, where, Rishi, where, in fact, I trace my Gotram to that guy, Vishwamitra. See, we are all crazy fellows. What that Vishwamitra would, when Trishangu came to Vishwamitra, when king, Ishwaku king, he came to Vishwamitra and said, I want to go to heaven in the body. Without dying, I want to go to heaven. Everybody wants to go to heaven. Nobody wants to die. So Ishwaku's, that fellow Trishangu said, in the body I have to go. Vasishta said, I'll kick you out. Vasishta, his Kulaguru, said, kick you out. You have no business coming and asking like that. Get out. If you want to go to heaven, you do certain things, I will tell you, then you will go to heaven when you die. Said, no, I should not die, I should go. But Vishwamitra said, I'll make you go, I will make you go. So this fellow takes him and he does all sorts of things with his tapabala. He pushes this guy up, all the way up there to heaven. So this guy is trying to enter heaven with a human body. The gods, the devas are telling, hey, no way you can come inside like this. Your spirit body only can come. Oh, you can come, get out. So they push that guy down. No, this fellow is falling. And as he's falling, he's screaming. He's saying, hey, Guru, what is happening? I'm falling. So Vishwamitra said, what is the problem? They are not letting you there? No problem. You don't want to come here? No problem. I will give you a heaven in the middle. So that is called Trishangu Swarga, where in between, neither in heaven nor on earth, in between, hanging, happy but he was having all the happiness of heaven, but neither here nor there. I hope the story, though it might be a little boring to some of you, you got the point what the institute has done. In those days, they created on Trishangu Swargam for this share application money pending allotment. They said neither below share capital, above reserves and surplus. Okay, and there it stayed. Okay, even my view is it is wrong. You have to show it under unsecured loan, but institute guidance note is binding. I said, chalo, we'll show it below share application money with a separate line item. Now, our MCA has followed that guidance note. For once, the MCA has followed the institute's guidance note. So they've created one line item. You can check out in Schedule 3, below share capital, above reserves and surplus, you'll find share application money pending allotment, separate line item. Now, if you take something there, without body. I have not been to heaven, so I cannot answer your question. Okay, I will answer your question in a different way, Sampath Rao. Heaven is not up there. Hell is not down. Heaven and hell are here now. We create our own heaven, our own hell. You understand? That is the reality. Heaven, Swarga abhi hai. Just now you are in Swarga. You can be in Swarga. You can enjoy without. But we create hell. We create hell. We say, sir, are you going to cover all the topics? Will you be able to cover? Will I be able to write the exam? Will I be able to pass it? Worrying about the future, feeling bad about the past. We ignore the present and we create our own little bit of Krishan hell we create for ourselves. Okay? Rather, you create your own heaven. Just be happy, relax, and go. This is my view. And just for fun only, I'm also answering. There is no, whether there is heaven, who knows, whether there is hell. One thing I know, here and now, heaven is there. Here and now, hell is there. You can create it. You are the creator of your own heaven. You are the creator of your own hell. So be happy, and that is the only way to ensure that you are always in heaven in the body. Yes. Okay. Anyway, coming to the point, I'm sorry to have taken this topic all sorts of places, but point here is, if you take in share application money pending allotment, it is not a deposit. So long as such amount is appropriated only against the amount due on allotment of the securities applied for. So it is a one-way route. Suppose it comes in as share application money, it cannot go out. It has to be allotted as shares. In between time, that in between time, during the time when you have not allotted the share, during that time, it will not take the color of deposit. It will not be treated as deposit. Okay. So there is one more condition for this. We'll see it in the next slide. But right now, one more exemption. See, this is a very lengthy topic. I told you, in your own institute material, 6.5 pages. So this is possibly 3/4 of more than half of this today's class will go here in this topic. And from exam point of view, very, very important. Okay. From a person who, at the time of receipt of the amount, was a director of the company or a relative of the director of the company. Okay. So these two are very, very important. This is also very, very important. I would say very, very important. From a person who, at the time of receipt of the amount, was a director of the company or a relative of the director of the private company. Means what? You are getting a loan from a director. At the time of giving the loan, that fellow should be a director. Or if it is a private company, both director as well as relative of director can also give. We know who is the relative definition, you know. Any of those people can give. If it is given by a relative also, it will be exempted. Suppose they do not fall under the head of relative, then this definition is not applicable. This exemption is not applicable. For example, if the company takes 5 lakhs from the MD's brother-in-law, private company, MD's brother-in-law means wife's brother, this exemption won't apply. Why? Because brother-in-law, wife's brother is not a relative under the Companies Act. Okay. So these wordings are very important. If they simply say any loan received from a director, no. The person should have been a director at the time of receipt of the amount. For example, Mr. A gives a loan of 5 crores to the company. At that time, he is not a director. Subsequently, he becomes a director. Will that amount be treated as deposit or not? It will be treated as deposit. Why? Because, I repeat, Mr. A gave 5 crore to the company. Then 3 days later, he was appointed as a director, thinking that they are planning. Somebody told them, loan from director is not covered here as deposit. Somebody told. So they immediately appointed this fellow as a director. Will it cure the defect? No, because at the time when the loan was given, our man was not a director. So that 5 crore will be treated as deposits under the Act. See, what will happen if it is treated as deposit means you will be seeing elaborate rules, including limits are there, up to which only you can take deposit. Also, conditions are there, etc., etc. So all that will lead to heavy penalty. So which is why many companies, this is a major problem for many companies, which is especially private companies, because they cannot comply with the rigid rules of deposits. But they want to take money from a few people, 5 people, 6 people. Unsecured loan, somebody is giving. How to take? Cannot be taken because it will be treated as deposit and you'll be complying. So what we will tell immediately, sir, if this amount is given as by a director, no. So in some cases, when those people are known to us and are giving a huge amount, when it is worthwhile, we will make them non-executive directors. So first we'll appoint the person as a non-executive director, then he will transfer the amount. We will treat it as a loan, give him interest and all that. Once at the time of repayment of the loan, we will first remove him, then repay the loan, close the amount. This is one method of, shall we say, planning or circumventing this rule. That is why they put one more condition. The director of the company or relative of the director of the private company, as the case may be, from whom money is received, furnishes to the company at the time of giving the money a declaration in writing that the amount is not being given out as funds acquired by him by borrowing or accepting loans or deposits from others. So the idea is to prevent agency. Means what happens now? I make A as my director. Then A goes around giving false opinion about my company, takes money from people, pulls all that money and gives to me as a loan. No, he should give a declaration that he is giving it out of his own funds and not out of funds acquired by borrowing or accepting loans. This is a very important criteria. You have to be very, very careful. Okay. Now, we go back to the application money. Share application money pending allotment. The securities for which application money or advance for such securities was received shall be allotted within 60 days from the date of receipt of the application. Please note, see, this is where when you become a CA, you should remember all this. Very important. Because at that time, it will be easy for you to go to your MD and tell him, sir, you want that money? No, sir, you take it, sir. No problem. What we will do, we will show it as share application money pending allotment. Now remember, if you do that, the shares shall be allotted within 60 days. If such allotment is not done, then such application money or advance shall be refunded to the subscribers within 15 days. If such refund is not made, such amount shall be treated as deposit under these rules. So one case, what happened, one very intelligent finance person, not a chartered accountant, non-chartered accountant, that is a problem, non-professional, he comes and he gives an advice and he goes away. He runs away, he resigns and goes. When we start the audit around October, we find this fellow has come and bought in that money. And it is shown as share application money pending allotment. So I call the new finance manager and ask, so what is this share application money pending allotment? When are you going to allot now? No, sir, I don't know what it is. Then I call MD, Mr. MD, what is this? No, Srikanth, you know that money we had to bring that Sundar or Murugan or Raman or whatever, any one of your name, Rahul Sharma. Somebody told, it can be done if it is share application money. He told you only taught him like that. Sir, I taught him. No, but I also taught him that it shall be allotted within 60 days. Now we are in October, Baba, you are not allotted. What to do? Nothing can be done. You violated the rules. Go to the company secretary, go for condemnation, go for compounding, something like that, blah, blah, blah. This is why never do anything unless you are completely aware. That's the point. Okay. So it's a good planning method. I have done it many cases where money was needed, but idea was to allot it as shares. Another easier method is, instead of bringing in it and as a loan, bring it in as convertible preference shares or compulsorily convertible preference shares, or bring it in as even redeemable preference shares. But only problem is, when you bring it in as redeemable preference shares, the dividend, is not tax deductible. So you'll end up paying tax on the dividend. Means you can declare dividend only post-tax. So you can't get, it's an appropriation of profit. Therefore, that may not work if the company wants to claim this amount as a deduction. Don't work. Okay. So like that, there are many, many things you have to consider before you can advise the company. Any adjustment of the amount for any other purpose shall not be treated as refund. You have to give the money back. So these two conditions, please remember. Okay. Now, Priya is asking, will you upload these notes on boss portal? Yes, madam, I will. Okay. Already earlier topics have been uploaded. It's also will be uploaded. And since now I've been doing it, maybe I should put a small box in the top, in every slide, clearly saying these notes will be uploaded like a statutory, announcement. These notes will be uploaded in boss portal. Don't worry like that. So that students won't have that doubt. At last, last, sir, it's like this. All amounts are considered as deposits other than these amounts. So unless you know these amounts, finally I'll tell you what amounts. I'll tell you what amounts will be basically be considered. But I will cover the topic. But since you're asking, I'm telling you, unsecured loans which are not coming under these exemptions will be covered. Like in my example, see, somebody is giving unsecured loan. He gave 5 crore. It's an unsecured loan. 3 days later, he becomes director. So that unsecured loans will be treated as deposits. So any unsecured loan lying in the balance sheet, be very, very careful. If you're auditing a company, look for the unsecured loans and find out. Because if they are there and they are not coming under any of these exemptions, they could be treated as deposits. So that is why you have to be very, very careful about unsecured loans. See, I'm again explaining. In case they are treated as deposit, the compliance with the rules will be there. Suppose an amount is treated as a deposit, then this topic you're going to see now, there are many, many, many compliances are there. Obviously, the company would not have complied now, including a circular has to be issued, an advertisement has to be given, statutory advertisement. So many conditions are there. So you would be straight away non-compliant. Okay. So that is the problem why you should come through this definition. Okay. So this is very, very important. You may not be able to understand it now. When you become a member and you join a company as finance man, then only you will understand. When you work with an entrepreneur, only then you will understand the need of an entrepreneur to get money and the legal problems. Only then you know you have to advise him now like that. So that is why this becomes some kind of a minor loophole. This director partner is a minor loophole. Minor, but not a panacea for all evils. Minor loophole. That is why you will find Institute also will be asking questions in these cases. By the issue of bonds or debentures secured by a first charge or charge ranking pari passu. Somebody was asking what is pari passu. Immediately I know what that fellow has done and what that person has done. He has read the entire list and he has come to pari passu. Before I am coming there, he is asking. Thereby, how can I go to this place? When I come there, you can ask. Even before I came, now only I am coming now. He is asking that question when long ago he was asking what is para passu like that. Correct, I got it. Ramja. So now I am going to explain pari passu. This word is very important. You will understand it when I come to. You will need it when I come to the charges also. This will be taught in more detail when I come to registration of charge also. I will explain to you. Okay, because what I'm explaining now, many of these will be useful to you when we come to charges. At that time, again, I need not explain to you. Because what is a charge? Listen to me very carefully, easily you can remember. When I come to charge, you will tell me what is a charge. Charge means when any asset belonging to the company is offered as a security for a loan, a charge is said to be created. I repeat, when any asset belonging to the company is offered as a security for a loan, a charge is said to be created on that asset. That asset becomes a charged asset. So whenever we say charge, immediately you should ask, sir, what is the asset? Charge means immediately say what asset. When there is a charge, there should be an asset. Without an asset, there can be no charge. Okay. So 3 things should be there actually. There should be an asset. A charge means there should be an asset and a liability. So we should ask, sir, charge is created on this asset now. Against which loan? One. Also, sir, there's a loan now. You're saying secured now. So, which is the asset on which charge has been created? So, when you're auditing the balance sheet of a company, if you go to secured loans, there you'll find in the notes on accounts what are the assets being offered as security. Now, while creating the charge, there are many methods of creating. I'll give an example, you will understand. Company has a land or land and building. Okay, maybe they have a huge land and building in Nariman Point, Mumbai. Okay, Nariman Point, Mumbai, huge land. They got 2 floors in a huge building. Let's not bother about the amount. It's 100 crores, for example. Now the company is borrowing. So the company has borrowed 25 crores from a bank. 25 crores from a bank. Okay. Now that 25 crores to secure that, they have given this property, 100 crore of property they are given to the bank as a security. So charge has been created. So bank has given a loan, which is not a deposit. We are not talking about deposit here, but I'm explaining pari passu and first charge. So bank has given a loan. For that, security has been given. That is called charge has been created. Now the bank has the right to sell that asset and recover its loan. So it has a secured loan. Got it? Suppose instead of taking a loan from the bank, you issue bonds, means some debentures, which are secured on this property. So in case the debentures are not redeemed, the debenture trustees can sell this asset and take the money and repay the debenture holders. So it is called first charge. Means only I have the right, or the creditor has the right, first right to sell the asset. He has the first right. So if I recover my loan, if something is left, then the second charge holder will get it. Are you able to understand? I give an example. We took a loan of 25 crore from one bank. Okay, we gave this 100 crore asset to them. Later on, we needed another 50 crore. We went to that bank and we asked him, boss, are you ready? No, we can't give. So can I go to some other bank and borrow? Syndicate it for me. Make it a syndicated loan. Both of you become there. 100 crore asset is there now. You give up your first charge. You give up your first charge. So the bank will say, no. We will have first charge. Give them second charge. Meaning what? In case the company is not able to repay, the asset will be sold. Amount will be recovered now. First charge holder will get paid first. If anything is left, balance amount will be used for paying the second charge holder. Now, so the second fellow says, no. You go for pari passu charge. Pari passu means, as Suman Goyal says, ranking equally, or will get it proportionately. Actually, ranking equally is correct. Pari passu, with equal step. Actually, the Latin term pari passu means with equal step. Pari means equal, passu. Pari passu means equal step. So, if I get, you get. If I don't get, you don't get. So, when the pari passu charge is given, then both the banks have equal right. Suppose the asset is sold, 100 crore. So, together they are owing 75 crore. Together they are owed 75 crore. Let us say with interest it has come to some huge amount. Now the asset is sold. When the asset is sold, it realizes only 70 crores. Now, together these two banks are owed 80 crores. 80 crores they have to get. Let us say the asset realizes only 60 crores. So now, one fellow 725, the other fellow 75. So, out of 60, one fellow will get 25 by 75, other fellow will get 50 by 75. So, pari passu. Pari passu means with equal step. Obviously, they won't get equally. How? Because he is owed 25, I am owed 50. So, proportionately, but when he gets, I also will get. If he gets, I also get. So, both the charge holders will get. Just I'm explaining all this to you because it may be new to you. So, by the issue of bonds or debentures, which are ranking pari passu, or a charge ranking pari passu with the first charge on any assets. So whatever it is, if there is a security, so here they are excluding intangible assets. Charge can be created on intangible asset also, but for the purpose of this exemption, they are excluding intangible assets. If you want it to be secured, then it has to be secured on tangible assets only. Okay, right. And either you issue fully secured on tangible assets, debentures or bonds, or you issue compulsorily convertible debentures, CCD, compulsorily convertible debenture. That means what? There is no option to take money. It has to be converted into shares of the company within 10 years. So, no money. You give me money now, no repayment, only conversion, compulsorily convertible. So, compulsorily convertible debentures will automatically get the color of equity, sort of. So, for the purpose of diluted EPS and all, you will take this into account. So, as equity only, you will cover it, look at it. So, that for that purpose, they say if you issue compulsorily convertible debentures, that is also not a deposit. So, my understanding is simple enough. Either you issue fully secured debentures, issue debentures secured on fully secured with first charge or pari passu charge on any tangible asset, or issue debentures that are fully convertible, compulsorily convertible within 10 years. In these two categories, it is not a deposit. In fact, this is one more way by which some companies will do planning. They will say, if you want to take that money, don't take it as a thing, unsecured loan, take it as a compulsorily convertible debenture. Problem here is the lender may not want to convert it into shares. He may want money back. Right. So these sort of issues are there. Or you issue non-convertible debentures, not constituting a charge on the assets. That is unsecured debentures without any charge, provided it is listed on a recognized stock exchange as per applicable regulations made by SEBI. Now, some of you who are smart will relate this to legislation. You remember where a private company may want to borrow money. So what it can do, it can issue non-convertible debentures and not create a charge and get it listed on stock exchange, complying with SEBI. That will not make it a listed company. You understand? That will not make it a listed company. But only for the purpose of this facility, they may get it listed on only the debentures will get listed on a stock. You understand? So that is why they said listed company, a private company can never become a listed company, but its debentures may be listed only for the purpose of circumventing this regulation. Okay. So we might go for listing, but that will not make the private company a listed company. Only debentures will be listed, non-convertible debentures, which are not secured. Because if you issue non-convertible debentures, which are not secured, straight away it will be treated as deposits. To avoid that, what you do, you issue debentures, non-convertible, not secured, but get it listed on a recognized stock exchange. Okay, so you can do that. So this is one type of a. Let me check out. Beulah says that institute material said something differently. Let me see. Point number 10. 1 second. Give me 1 minute now. The discrepancy, it is my duty to explain. Any amount received from. Madam, point number 10. I'm not able to see that, ma. My point number 10 is employee. Let me see. Please take Miss Beulah. I don't know where you are. That's what I'm saying. Don't do this activity, but you're doing it. Please come to page number 5.5. Come to point number Roman 7, italic 7. V followed by 2 small i's. Small v followed by 2 small i's. Any amount received and held towards subscription. That is what I have been covering. Okay. Okay, there it's very clearly said now. Page number 5.5 to 5. Turn the page. There you will find clearly this point is Yeah. So kindly, Beulah, please don't do this exam. The institute material is not in sync. My notes is not in sync with institute material. Both of us are in sync with the law. And that is the reality. Okay. Neither your institute material or our institute material or my slide is God. Okay. This WARE Act is the God. Okay. The rules are the God. I have referred to that and created these slides. So kindly do not worry about it. In case you think I'm wrong, I'm wrong. Yeah, after all, I'm an ordinary human being. I'm entitled to be wrong. Huh? Okay. So, Beulah, you got the point. Kindly confirm that you got the point. Please don't. 10 is a different point altogether. 10 has nothing to do with the point we are discussing now. We will be coming to it. Okay. But, even though I'm warning you not to use the material, not to refer to the material, etc., and still keeping the material with me because I feel that, you are all set and then you are intermediate students. So some of you might have just come out of college. So you're still hung up on that, sir, in the books are like that. So that's right. Other than that, what is the purpose of listing, sir? You go and ask a private company. This is one of the reasons why they will list it. Sometimes, if you want to raise money from the public, you can do that through this route, listing route. Sometimes. But remember, you can't make an offer to the public. You are a private company. You cannot make an offer to the public. You can only go for private placement. But you might to my knowledge, this is one of the reasons why they get it listed. Sometimes, when you go for credit rating, your ability to borrow from banks is also increased. So they will go through the process. Madam Mansi ji, I cannot understand Hindi. Please understand. If you write in Hindi, no, I cannot understand. You are not able to write in English? Can you write what you said in, because I don't know if you're insulting me or telling something to me also if you're telling in Hindi. See, I don't know whether you are telling me something good or bad also, I don't know. By the way you have written. सबको बोल दीजिए कि study material class 10 not read. No, whatever you say, please put it in English. I'm not able to understand that. Mostly. Yeah, that's what I've given you the reference to the institute material. Now, have you gone to the institute material where I told you to see? Have you seen? Please go to the institute material, point number 7, and check. You will find what I've put in slide 10 is there in that. Okay. So one request is, see, sometimes I can understand Hindi, but the way Mansi is writing her Hindi is also not able to understand. So sometimes students write in Hindi, now I'm able to understand. Not that totally zero in Hindi, but the way you are writing Hindi also a little bit not able to understand. So, chalo, moving on. Yeah, I can only understand. Getting confused. Aapko confused ho jata hai. So you are getting confused. Am I getting confused? I don't think so. I am not confused. Okay. I am not getting confused. I am clear. I hope you are clear, Mansi. Don't confuse me now. Okay. Who is getting confused ho jata hai? You decide, not me. You are getting confused? Don't worry. Okay. You follow what I'm saying, you won't get confused. Okay. And pick up English, ma. Pick up English. Okay. How long you will keep writing in Hindi? How long people will also accept that? Somewhere somebody may say, no, please write in English now. That's me now. Okay. Okay. So I understand your English is not good, but what to do, you tell me. Somewhere you have to improve your English. Okay. You have to be good for you in the long run. The short run, it is irritating. Srikanth may seem like a bad man. He might be seen like a man who is keeping on pushing you. But in the long run, you can. See, when you write in Hindi, you think that you're taking a favor of me. Don't do that. Everybody may not be able to understand Hindi. Please understand that. So accept that and start communicating in English. Unless you're writing the English in examination in Hindi, in which case my class in English itself is not useful to you. Okay. So now, so coming back to the topic, by the issue of bonds or debentures secured by first charge PSN. Pari passu also we have seen. Now, by issue of non-convertible debentures, we have seen from an employee of the company not exceeding his, this is your point number 10, from an employee of the company not exceeding his annual salary under a contract of employment with the company in the nature of non-interest bearing security. So, security deposit. So, sometimes company, while employing a person, may ask him to give a deposit. Okay. So, you can't take a deposit from an employee which is not exceeding his annual salary. Suppose his annual salary is 13 lakhs. Then you can ask for a deposit, but that should not be more than 13 lakhs. And that should be under a contract of employment. And it should not bear any interest. So they have given employee deposits as one example of exempted deposit. Non-interest bearing amount and held in trust. Simple. You have received, I'll tell you one simple example, easy to understand. Bank has wrongly credited the company's account. Bank has wrongly credited the company's account with 10 lakhs. Wrongly credited. That is not my money. It belongs to somebody. Bank has wrongly credited my account. It doesn't belong to me. So what I'm doing, I'm keeping it in my account, informing the bank. Bank wala doesn't even bother. After repeated reminders, one fine morning he reverses it and it goes out of my account. Now for that interregnum period, that money was lying in my account. It is not. It is held by me in trust. It is not belonging to me. I'm holding it in trust for the real owner, and I'm keeping on informing the bank. When the bank reverses it during the interim period, it will not be treated as deposit. In the course of, or for this is very, very important again, amounts which are received in the course of or for the purpose of the business of the company as an advance for the supply of goods or provision of services. So any amount received as an advance for the supply of goods or provision of services. See, note it. Suppose you're receiving it as a sale proceeds. It will not come in the deposit definition itself. Income cannot come, revenue cannot come. Because what did they say? Any amount of money received as a loan, deposit or loan or anything. So income will not come here. Suppose you're straightaway raising a bill and he's making a payment against the bill, it won't come here at all. It is an income. Whereas, suppose you have not raised a bill, but he is giving you an advance. For what purpose? For future supply of goods or provision of services. Okay. And it is in whatever manner you account it. You call it advance, you call it deposit, you call it whatever you want. But if it is received for the supply of goods or provision of services in the ordinary course of your business, then that is not a deposit. Provided such advance is appropriated, means adjusted by supply of goods or provision of services within 365 days. Suppose you have received the advance, you have not made the supply, there are some legal proceedings, then 365 days will not apply. You can keep the money pending the litigation. Okay. Maybe you started executing, in between they disputed, then you said you are owed this money. So that money is now subject to some legal proceeding. Now, then within 365 days, you cannot close it. So it can be kept open. It will not be treated as a deposit. Suppose you are selling an immovable property. You are getting some advance before for that. See, at the time of entering into the agreement for sale, we are receiving 2 crore advance for sale of immovable property. That will not be covered by deposit. Any security deposit for the performance of the contract. See, you are having contract, you are constructing a factory. Now you are getting contractors. Now you are telling the contractor, look here, I will allot this work to you, it's worth 2 crore. But you keep 20 lakh security deposit with me. If you perform the contract correctly as per my need, I will refund it to you. Such a security deposit will not be treated as a deposit. Any advance received under long-term projects for supply of capital goods. See, you are a company which manufactures boilers or which sets up a factory and supplies long capital goods. Okay, obviously, such long-term projects will take 1 year to 2 years. And as part of the contract, advance will be received. Such advance received will not be treated as a deposit. Why they give this D separately? Because under A, that advance has to be closed within 365 days. So here they are giving one more point where it is a long-term project, and that too for supply of capital goods. So that category will not come A, it will come in D. Okay. Then, as an advance towards consideration for providing future services in the form of a warranty or maintenance contract. See, you are receiving money. For example, you are a car manufacturer. Now you are giving him 3 years warranty. Agreed. Now, some manufacturers, what they do, along with 3 years warranty, they say, you pay another 25,000 rupees, we'll extend the warranty to 5 years. Got it? So, 2 more years extra warranty we will give. So, that extra money, that 24 now, will be kept in the account only. It's a liability. It can be treated as income only after expiry of 5 years. Am I correct? Because only after, if during that 5 years, warranty claim has been made, so till that warranty is there, you have to keep it as a liability. So it will be kept under other liabilities only, non-current liabilities. Now, if such cases, those advances are not treated as deposit. So period of providing such service should not exceed the period prevalent as per common practice of or 5 years, whichever is less. So suppose you are selling a item that useful life is 20 years. Then you might give a warranty itself for 10 years and you might collect some warranty money for warranty. Then that money will not be treated as deposit. As an advance received and as allowed by any sectoral regulator. Okay, a classic example, sectoral regulator, the Telecommunication Regulation Authority of India, TRAI. So all cellular, the mobile phone telephone providers, mobile telephony providers, the mobile connection providers, all of them are governed by TRAI, the Telecommunication Regulation Authority of India, Telecom Regulation Authority. Now, this TRAI will empower these people to collect advance. See, whenever you have a postpaid service or a prepaid service, they will take an amount from you as an advance. Huge amount. See, if you take all the customers across India, the Airtel amount of advance pending in the books will be huge. It will be running in hundreds of crores. That money, which is received as an advance, as allowed by the sectoral regulator or in accordance with the government direction of central or state government, is not a deposit. Then, suppose you are giving an advance to any publication for any print media or electronic media publication. If you are giving as an advance for this is for a print media. That is, you are a newspaper or a news agency or a television company where you are receiving money in advance for publication or running the advertisement. Now that money will not be treated as deposits. See, they are only giving you exemptions which are commercial. These are normally commercial activities. In the normal course of business, they are received, so they will not be treated as deposits. Okay. Now, if the amount received under A, P, and D, A, supply of goods or provision of services, B, consideration for immovable property, B, long-term projects, advance for long-term projects. These three categories becomes refundable due to reasons that the company does not have necessary permission or approval to deal in the goods or properties or services, then the amount received shall be deemed to be deposit under these rules. But the amount will be deemed only on the expiry of 15 days. So you either supply goods or if you are repaying it, it will be treated as deposits. So if you want to avoid problem, then from the day you feel you cannot deliver the goods or provide the service, within 15 days, you refund, you are safe. But beyond 15 days, if you don't refund the money, that amount will be treated as a deposit. Okay. Amount received from, almost we are coming to an end. Don't despair. This is getting over. I know some of you are getting bored, but what to do? From promoters of company, subject to the following conditions. See, promoters need not be directors. So director, already we have seen the exemption. Here, we are talking about promoters who need not be directors. People who are engaged in the formation of the company or parent company, which is not director here. That parent company is bringing in money. promoter is bringing in money. Okay, for what? The money is being bought as loan in on the basis of a stipulation or condition imposed. Stipulation means condition imposed by the lending institutions on the promoters to contribute such finance. Simple. The company is setting up a cement plant. So the cement plant project cost was 400 crores. Example. Now what has happened due to inflation, etc. Cement, the price of cement itself is going up. So they have to construct building now, etc., etc. So because of that, the project cost is going up. So project cost is the new project cost is now 450 crores. So they go back to the institutions and say, boss, we wanted to borrow 300 crore. We will bring 100 crore. Okay. Now the project cost is what 450 crore. Kindly give us 50 crore. Institution will say, no, I cannot give you 50. You bring in. So out of 50, you bring in 35. I will bring in 15. I'm sorry, you bring in 15. I will give 35. So that 15 crore is brought in now. That is being brought in as a kind of on the stipulation imposed by the lending institution. And the loan is provided by the promoters themselves or by the relatives or by both. Okay. And such exemption shall be available only if the loans to the financial institutions are repaid, not thereafter. So this is being bought as a condition. Therefore, it is also amount received by a Nidhi company in accordance with the rules. That is, Nidhi company is a company. It is not an NBFC. Therefore, it will not be exempted also. So here they are exempting. Any Nidhi company may accept deposits from its members that will not be covered by these rules. Though it is not covered by these rules, it is governed by RBI. Don't worry. It is not Nidhi company is escaping. Nidhi company is governed directly by RBI and rules. So those rules will become applicable to Nidhi company, right? So similarly, any subscription received by a chit fund company, chits exempted. Also, any collective investment scheme. See, many mutual funds, they have asset management companies or many, they have portfolio management services by which they will form a collective investment scheme. This will be approved by the SEBI. So this collective investment scheme collects money from people, say 25 lakh per person, pools it and invests it in certain specified securities. So such cases, that money collected by the asset management company under a collective investment scheme, along under the regulations of SEBI, is not a deposit. Also, amount received up to 25 lakh rupees, 25 lakh rupees or more by a startup company by way of convertible note, repayable within a period not exceeding 10 years in a single tranche from a person. See, startup companies sometimes may be funded by individuals. So that individual, what he will say, I can't give you as equity. Now I will give you as a loan. If you do well, we will convert it into equity. So it is a convertible note. So the startup company will sign a promissory note, officially enter into an agreement by which they will agree to say, we will repay this within, say, 5 years or 6 years. But if the company does well, you have an option to convert it. And this amount of 25 lakhs or more should be received by the startup company in one single tranche, means in one single payment. Tranche means installment. So this should be given in one shot, single payment. So 1 crore means it should be given in one shot. 1 crore convertible note will be repaid within at the end of 6th year. In case the company does well, he can convert it also like that. In those cases, for a startup company, it is exempted. Okay. And any mutual fund registered with SEBI may collect, the asset management company may collect money from public. Mutual fund, that is also exempted because mutual fund asset management companies are not NBFCs. So they are saying they are exempted here. So startup company is being defined. It's a private company which is, notified by the Department for Promotion of Industry and Internal Trade. You just have to go and get your recognition from them. They will verify whether you are a startup, whether you are eligible. They'll give you the recognition. Okay. And similarly, convertible note, I already told you, is an instrument evidencing receipt of money initially as a debt which is repayable at the option of the holder, or which is convertible into equity shares of the startup company upon occurrence of specified events. For example, if the valuation reaches a certain value, then the convertible note will be converted into shares, or else he can ask for repayment. Okay, I already explained to you what is a convertible. So at last we have completed all the definitions. I'm sure some of you are feeling a little tired after this, and you might want a break. So what I would suggest now, let us have a small break for 5 minutes. Yeah, I know I went a little fast here. I am considering it. I went a little fast because these are all not important. That is why I went a little fast. So I am considering it. No problem. If now you have put in English, now I am able to understand. Tell the children not to spend class time extra. I've been literally begging people, don't refer to the material when you are attending. See, Beulah was asking a question. It was definitely a waste of everybody's time. So, in case there is a mistake in my material, don't worry. Wait for the end of the class. At that time, you point out the error. I will check up at that time. Wait till the end of the class to point out an error in my material. And again, do not give my reference. Give the institute page reference. Okay. See, one thing I'll tell you. Even if you have not understood this part from here on, it doesn't matter. It is not important. But you should have understood this very well. Here, if you have a doubt, you ask. Or if you have a doubt in this is the most important. The blue colored one, very, very important. The blue colored ones are very, very important. The blue colored ones in my slide, once you get my slide, the blue colored ones are very, very important from the exam point of view. I know I went a little fast. I know many of you will tell I have not understood what to do. Otherwise, how to complete, you tell me. In spite of, I have been explaining slowly. I have explained you what is convertible note. I have explained it, but still some of you are doubt. No problem. Yeah. Loans are not income, they are also liability, not income. Loans are not income, but the definition says, any deposit of money, any deposit or loan in any other form. So loans are covered in deposit. I think you have not understood something. You think a little more, you will understand. Income is not covered here because any amount which comes as income will not be covered as deposit straight away. Whereas advance is not income till you raise the bill. So here they are saying any amount received as an advance in the ordinary course, though it is not income, it will not be treated as deposit. Nidhi companies are like finance companies. They will borrow and lend money only to members. Okay, that much is enough for you. They will accept deposit from member, but they will deal only with members. They will take deposit only from member, give loan only to member. It's a separate class of company, not in your syllabus, not relevant. Any deposit of money, any amount received by a Nidhi company is not a deposit. That's all. Okay. Yeah, time of allotment of shares is 60 days for both private and public companies. No problem. Yeah, if you do, Mansi Gupta, you don't want me to misunderstand you, speak in a language which I can understand, which is English. If you put in English, I will have no misunderstanding. I said, no, I have no misunderstanding. I have understood what you said, but since you put it in Hindi, I did not understand it. So you put it in English, I will understand it. Okay, Ji? From now on, kindly don't believe me. Let me take a favor of you. You please help me, this idiot who doesn't understand Hindi, you please write in English. Okay. Mr. Ramja, you send this note to the institute. If they ask me to do it, I will do it. If you have decided that you want to do the class, if I should obey what you say, no, I have to do what the institute is saying. As per the institute timetable, today's topic is this. So if you want revision of all the previous topics, you please inform the institute, let them allot one separate class for me. I will fix all the topics joyfully. You understood, Ram? So life cannot always be going as per your instructions, sir. There are other things also in life. Huh? Other people also have things. So if you want revision, you ask institute for one more class. Only revision we will do. Otherwise, how to cover the syllabus? Yeah. Huh? If every day you do revise, all that if you want, you then you have a different. It just cannot be done that way. Okay. No. So I will announce a small break for 5 minutes, and this question I'm keeping on the board. Hmm? Go through it. Kindly try to, based on your knowledge, try to answer. Sir, break, sir. Mr. Deepak. Now, what we are going to do, welcome back from your break. In fact, today, usually I will not need a break. But today, after teaching this topic and receiving all sorts of comments and all that, I am feeling a little emotionally drained. Not physically. Physically, I'll never become tired, hopefully. Physical tiredness you can solve by sleeping. You become emotionally drained. Students don't understand that the faculty is teaching. You can't keep on telling him, do this, do that, do like this, do like that. So if 2,000 students give different instructions, very difficult. So just listen to my lecture. Don't like what I'm doing, leave it. Don't give me command to do this, do that. I know what I'm doing. The institute knows what it's doing. You like it, you like it. You don't like it, don't like it. If you want personal teacher, hire a personal teacher. He will come and do what. Even he will. See, if he's a reasonably egoistic man like me, who has some knowledge and has some awareness about himself, he will not obey whatever you say. The teacher will come and teach you at the way he wants to teach. Coming to the point, these are all very important. From the exam point of view, very, very important. So they keep repeating it also. In fact, the other day, one student, I forget who, wanted me to do an ABC analysis. If you're asking ABC, then these are A. So why are you bothering about B and C? This is A. These are A. So rupees 5 lakh raised by Rishi Limited through issue of non-convertible debenture, not constituting a charge on the assets of the company and listed on recognized stock exchange. So these are non-convertible, not constituting, but are listed on a recognized stock exchange as per applicable regulations. So A, not deposit. Correct, Sampath. Correct. So that is why, I have given this important letter. Rupees 2 lakh received from Mr. Tejas, an employee of the company, who is drawing annual salary of 1 lakh 50 under a contract of employment, etc., etc. See, up to 1 lakh 50, his annual salary, not a deposit. Beyond that, it becomes a deposit. B, the entire amount will not become a deposit. Up to his annual salary, not a deposit. Beyond annual salary, deposit. Okay. You understood the B point? Up to 1,50,000, not a deposit. Beyond that, deposit. Rupees 3 lakhs received by a private company from a relative of a director. Private company from relative of a director. At the time of giving this money, is a relative of a director. The director is a director. But the declaration by the depositor is that it is out of gift received from his mother. So what is your answer for this? Also, Mr. R gives an unsecured loan of rupees 5 lakhs to the company on 19/6/2020. On 3/7/2020, he is appointed as director of the company. So C and D, can you give me your answers? In fact, weightage of questions wise, definition of deposit is something like 45% or 50% of the questions asked in this topic. Little more than that also. More than half. C, not a deposit. Correct. Yes, very well said, Ritoji Banerjee, that if provided he was a director at the time of giving of loan. Correct. See, in the exam, if you write assumptions like this, no, Ritoji, you are right. You will get more marks because if the question is vague, see, in this case, the question is vague. The question does not mention whether the person was a director at the time when the money was given. So you can make an assumption, as rightly said. B, yes, the reason is at the time when the unsecured loan was given, Mr. R was not a director. Okay. Correct. So you have well understood this. Now, moving on. So you can check out some of these questions are taken from the institute examination only, past questions of the institute examination. So, correctly said. Now we move on to definition of depositor. Depositor. Okay, two categories are there. Any member of the company who has made a deposit in accordance with the provisions of 73 subsection 2. So, clearly, deposits received from members governed by 73 subsection 2, whether by a private company or by a public company. See, private company can accept deposits only from members and relatives of directors and directors, whereas public company can accept deposits from members as well as public. Acceptance of deposits from members, 73 subsection 2. Public, any person who has made a deposit with a public company, straight away, is section 76. So, members, both private and public can take. But from public, only a public company can take. That too, only eligible companies can take. We will see that now. Okay. So, some points I have understood from this is, companies may accept deposits only in accordance with Chapter 5, which is why, suppose you have taken an unsecured loan, which is in this example, Mr. R, now this 5 lakhs will be deep trouble because this 5 lakhs has not been accepted in accordance with Chapter 5. Because to accept it in accordance with Chapter 5, rules are there. If you don't comply with the rules, then this is a acceptance of deposits in violation of the rules. There's a penalty at the end, as usual. So, that is why we have to know whether it is a deposit or not a deposit. Have to be very careful. So, companies may accept deposits only in accordance with Chapter 5 and the rules made thereunder. All companies may accept deposits from members, meaning what? Private as well as public may accept deposits from members. Okay? Only eligible public companies, I am again repeating, only eligible public companies can accept deposits from both members and public. See, again going back to this example, if this company is a public company, in case it is not an eligible public company, it is not even allowed to accept deposits. So, straight violation of the rules. That is why you should be sure that whenever you are getting any unsecured loans or such loans, etc., then which looks like it's not covered, you have to be very, very careful. You should advise the management or you should advise the client, hey, please don't take this loan because it might be treated as a deposit. In which case, if you don't comply with the rules, you will be in trouble. So, only eligible public companies can accept deposits from both members and public, right? Now, you obviously want to know, what is this eligible company, eligible public company? So that we have to see the definition. What is an eligible public company? It is defined in both 76 subsection 1 as well as in definitions. In the rules, there is a definition, 2(1)(e). In that also it is there. Basically, an eligible company is a public company. That's why they say eligible public company. So, to be eligible, it has to be public. If you are a private company, you can accept deposit only from members. Even an ineligible public company can accept deposits from members. But if you want to accept from public, both members and public, then only eligible public company can do. What is that? What are the criteria? First, the net worth of the company should be not less than 100 crores. Okay, so net worth should be not less than 100 crores. Turnover should be not less than 500 crores. Say 500 crores is pretty steep now. Not every company will have turnover not less than 500 crores, which means if a public company is having turnover 150 crores, it has taken an unsecured loan from a person who is not a director, straight away it is a violation of the rules. Got it? That is why we have to be very clear about whether it is a deposit or not a deposit. So you should try to bring it under not a deposit category. Suppose I am the auditor for a company where where the amount is 150 crores and turnover is 150 crores. Net worth is less than 100 crores. want to borrow money from my friend from Kochi. He's willing to lend me 5 crores. Can I take? No, boss, you cannot take unless you put it under one of these exemptions. That is when we have to start creatively looking at the definition of deposit. Where can I bring it in? Shall I bring it in as compulsorily convertible share, debentures, or shall I bring it in as direct? Shall we make him a director and then make him bring the money? Non-executive director. Like that, we keep looking at options. Okay. Private companies cannot accept deposits from other than members. Only eligible public companies can accept deposits from both members and public. I think this is given very clearly, na? Very clearly it's given, na? Now you are asking a different question. How private companies, maybe, can I correct your English for you? If so, how can private companies take loans? If so, it's a good question. If so, how do private companies take loans? You borrow from bank. You go to one of these heads, yeah. So many categories are there. Na? You go to one of these categories, central government. Mainly go to banking companies and borrow. If you want to take unsecured loans, make him a member here. Make that depositor a member. Take it. No, then also you'll be in trouble. Only way to get out is take him as a director. Make him a director and take. Now, so this is what it is. Question number B. Ramja came a little late from break. I hope. B. Boss, normally there is an exemption for employee ma. Do you see that here? From an employee of the company, see the blue color box. From an employee of the company, not exceeding his annual salary under a contract of employment with the company in the nature of non-interest bearing security deposit. In our example, in B, they have taken 2 lakhs from Tejas, who is an employee of the company. His annual salary is 1 lakh 50. So it is a deposit, but only to the extent of 50,000. Up to 1 lakh 50, which is his annual salary, exempted. It is not a deposit. Beyond that, whatever amount you have taken is a deposit. I have explained to you, sir. Please confirm that you have understood. Since you asked me, I am explaining again, repeatedly. Okay. Yeah, see, private companies are given a short deal. They have this law. They should have exempted private companies from all this. They have not done it. It's very unfair. If Regala Sampath Rao is asking my view, I'm giving my view. My view has no. I'm a zero value person in this country. I'm an ordinary chartered accountant practicing in the city of Chennai. What? Like, I'm not Ramja who can command people and all. I'm an ordinary fellow. I cannot do anything. Such a man's view, what it is of any use. But as a professional, as a man who knows the law, my view is that private companies should have been fully exempted. Private companies, you will see that they are exempted. Before somebody corrects me, I'll assure you, there are exemptions, but those are not enough. According to me, this entire chapter, that fellow should have gone out. Private companies should not have been interfered with. But this public companies only should be covered. But unfortunately, this time, they have brought private companies into the net. So, as rightly pointed out by Sampath Rao, how will private companies borrow? It's a correct question. I face it every day, ma. For you, it is an esoteric, theoretical question you are asking in my class. For me, it is my livelihood. Every year, I face one company, two company at least. The MD will ask me, Mr. Srikanth, how do I grow? How do I take money? I have to tell him, boss, go for conventional borrowing, no unsecured loans. Or else again, make him a director, blah, blah, blah. Again and again, we have to go there. Can a eligible person, non-eligible person, that is okay, agreed. take a loan by issuing non-convertible debentures without no. How possible? You are asking a question where you also know the answer. How possible? If you want to get the exemption, you should issue non-convertible debentures without security. It should be listed on SEBI. Without listing, how you can take? You understand? If you ask question like this, Rito, how I will answer? You are asking, I am answering. We are wasting your time, my time. You read the definition, you will know. Without reading the definition, you are asking how to answer your question. No. Sir, can a non-eligible person take a loan by issuing non-convertible debentures without security, not listed in stock exchange from public? No. But if you list it, then you can take it from public also. Because debenture now, again be careful. You cannot go for a public issue. You cannot issue an advertisement. You should only go through the private placement route. Please be careful. You are a private company. You cannot go the public route. You cannot issue advertisement. You can only go private placement route. To 200. Go for private placement. Get it listed. Can do. If it is non-convertible, non-secure. You can do. Try. That's what I'm saying. Some companies do that. It's not as if private companies don't do that. Because I can tell you, there are my own clientele I have private companies which are more than 500 crores turnover, net worth more than 100 crores. I've got private companies. So what I generally tell them, go for conversion to public company, go for conversion and comply with the rules. It's not very difficult to comply with the rules. Just that you have to be careful, that's all. And take money. Who will prevent you? You issue an advertisement, take money and all. Okay, now we come to a very important point, which is ceiling limit. That is, this is the upper limit up to which you can accept deposits from the public. Upper limit. I gave you an example now. MD calls me and says, my friend in Kochi wants to give me 5 crore unsecured loan. Can I take it? Please be careful. I take up his balance sheet. I total up the paid up capital, free reserves and security premium. Paid up capital, free reserves and security premium. Total comes to, it's a private company. Total comes to, okay, everything put together comes to 20 crores. 20 crores. No, he can accept, even assuming he is complying, there is a ceiling limit. 20 crore means what? He's an ineligible company. From members, he can accept only 35%. From members, he can only accept 35%. He's going to get 5 crore now. 5 crore, 20 crore, 25%. Safe. But suppose it becomes 10 crore, gone. 50%. He cannot accept it. There is a ceiling limit on the amount you can accept. You are an ineligible company, private company, public company which is ineligible. Then you can accept only from members. Only from members. And that amount cannot exceed 35%. Ineligible company, whether private or public, please see the table. Don't have a doubt. Private company and ineligible public company cannot accept deposits from the public. One more time, I want to answer this question. See this, please understand. Private company and ineligible public company cannot accept deposits from the public. Got it? They can accept from the members up to 35% of paid up capital, free reserves and securities premium count. Okay, this is very simple. Please, if you just listen to what I'm saying, you will understand. Okay, but if you don't do this, then very difficult. Show slide 22Y. Take a photograph. No writing. Don't waste. Already Priya was asking a question whether I will share it. I will share it with you. Yeah. We need to cover one more topic. Ankur Patel, correct. I'll explain. Anyway, we'll come to this point again. I'll explain it now also. See, in order to accept, we'll do one thing. We'll finish the ceiling and I'll again come back, Ankur. Okay, even I thank you, Ankur, for taking me back because there's something I have to cover there. Anyway, right now let us see the ceiling limit. Let us say that you are an eligible company. Eligible means only public ma. Private cannot be eligible because definition of eligible company, public company. So private cannot be eligible. Public only. In that also only some public companies which are satisfying net worth and turnover can become eligible. Such companies only can accept deposits. So if you are a public company, but you are not an eligible public company, only from members you can accept. Non-members you cannot accept. Only eligible company can accept. 10% from members, 25% from public. 25% from public. Got it? Eligible government company. They are not splitting the limits. They are saying, boss, whether member or public, up to 35% take. Enjoy. So the ceiling is 35. For eligible company, it is split into two. Member alone, SIF member 10. From public 25. Whereas government company, whether member or public, up to 35%. Not 70%. 35, either you take it from fully from members, or 35, you take it from public, or some combination. 15, balance 20 here. Whatever you want to do. Now, even for doing this acceptance of deposits, if you are an eligible company, for that, you have to pass a resolution. You have to pass an ordinary resolution. If the amount is within 181C limits, now you will ask, what is this 181C? I have to explain. 181C is in, boss Srinivasan, I may very clearly, that's why I know some of you will have a doubt. Not 70%. Srinivasan, listen to me. No. 35 total. Either totally from members you take 35, or totally from public you take 35, or in any combination you want. I can understand your misunderstanding, because the way it is given, it is quite natural that you will get misunderstanding. That is why I very clearly said not 70. It's only 35. Totally you take from members, 35. Totally you take from public, 35. Kadam. Then you can't take from members. Or else you split it. For government company, the relaxation is, there is no sub-limit for members. The total is 35. You can do however you want. Whereas for eligible company, which are not government company, total is 35, but there is a sub-limit, which is only 10% from members, only 25 from public. Like that. Here, any surplus in public category can go to member, any surplus in member category can go to public. Okay. Got it? Good. No, I know this doubt will come. That is why I very specifically told not 70 like that. Chalo. Now coming back to 181C. 181C is not in your syllabus. It is in final syllabus when you will study on your own self-praised modules, when you will struggle with 181C on your own. Okay. And at that time you will learn that if your company wants to borrow, see, the board of directors can borrow. The board of directors on its own, without any resolution, can borrow up to paid up capital and free reserves. Suppose the paid up capital and free reserves together total 50 crore. Up to 50 crore, board of directors without approval from member can borrow. Beyond that, if you want to go beyond paid up capital and free reserves, then you have to get a special resolution from the members. That is 181C. So here they are saying, if the amount is within 181C limit, that is, if the amount is less than total of paid up capital and free reserves, then board cannot do it. If it is a deposit, you have to get an ordinary resolution from the member, even though the amount is within 181C limit. That is total of paid up capital and free reserves. Still, you have to pass an ordinary resolution. Suppose the amount already borrowed by the company, together with this deposit amount, will be more than 181C limit. Then you have to obtain a special resolution. Okay. That is the point. So what is that 181C limit? It is nothing but total of paid up capital and free reserves. In the balance sheet, you have to take the paid up capital plus free reserve. Free reserve, you know what it is. Reserves available for declaration of dividend. So capital redemption reserve, no. Security premium, no. Revaluation reserve, no. Are you able to understand? So only reserves which are available for declaration of dividend or distribution as dividend can be considered as free reserve. So you totaled up that total, if your deposit amount plus already existing borrowings, complete all borrowings all borrowings, total, plus this total, if it will be less than paid up capital free reserves, no problem, pass an ordinary resolution. But suppose all borrowings plus this additional deposit will be more than paid up capital and free reserves, then you have to pass a special resolution. Hope I have helped you to understand this. Limits also clarified. Out of context question not answered now, will be answered at the end of the class, if at all I have time. You are telling out of context. Don't waste time here. If it's a real physical class, will you do things like this? See, suppose I'm conducting this class in my hall in Chennai. Will you raise this question suddenly in the middle of the class, you stand up? When I'm seriously teaching deposits, you stand up and say, sir, I'm going to ask a doubt which is not connected. Other students will beat you out of the class now. So some basic class courtesy is there. No? Don't waste that. Your question, wait for that. Don't ask the question now. Wait for the end of the class. Around, another 15 minutes down the line, there will be some, at that time you ask. So that I will also be able to answer it at the end of the class. I will answer. In the middle of the class, don't ask. What will happen? Your question will get lost in the query pad. So I may not even go back to it. So wait. Last 5 minutes. I'll even sit back another 5 minutes after the class. I will answer your questions. No problem. I have no problem. Another 10 minutes also I will take. But in the middle of the class, don't raise unconnected doubts, argumentative questions, and don't ask. But if it is connected with the topic, yes. Like Sambatra was asking, now, what will private companies do? No problem. No issues. Similarly, don't give me instructions on what to do, what not to do. That way, don't even try that stunt. Don't tell me, don't do like this, don't do like that. No. What I do, I will do. Okay. If it will be good for you only, I'm doing. What is not good for you, I will not do. Okay, don't worry. Okay. Now, sometimes I can be a bit of an irritating person. But that's how I am. 58 years old. My life was run that way. Okay. And I have not lost anything because of that. Okay. I have done what I wanted to do in my life, achieved what I wanted to do in my life, not by listening to people, but by doing what is right, knowing what is right, and doing what is right. Don't worry about it. And 58 mark. Agreed. Some of you may be 70. Salutes to you. Even then, you are sitting in my class now. 65 men sitting in my class now. So I'm 58-year-old man with 35 years of practice experience. Okay. So that much you have to have respect for the teacher and obey what I say. Okay. Chalo, coming to the point. Net worth definition. I have not covered it in preliminary. Now I am covering it. This definition is important. I told you at that time. When it comes, I will teach you. So now I am teaching you. Net worth. Net worth. Okay. Net worth is the big term. Whatever belongs to the shareholders in the balance sheet. So you have to take the balance sheet liability side. Aggregate value of paid up share capital includes preference capital also, total. See, the word net worth, whenever you find it in the act, not only in this topic, later on when you come to final, you will find the word net worth coming 3 or 4 times. Whenever you see net worth, this is the definition. Aggregate value of paid up share capital. It includes preference capital also. You add all results created out of profits, which means any notional profit or gain will not be considered. Net worth does not include reserves created out of revaluation of assets, write back of depreciation. See, there is a notional capital reserve arising in amalgamation now, not part of net worth. It may be in the balance sheet, but you should not include. Okay, only those reserves which are created of profits, which means if you sell an asset, you might make profit, capital profit. Agreed. That can be taken because though it is capital profit, it's a profit. So all reserves created out of profits can be considered. Where it goes, whether it goes to P, in fact, even profit on sale of fixed asset will go to P&L account only. And for tax purposes, it will go to IT. But it's for the sake of accounting, we call it capital profit. Okay. All reserves created of profits. Debit or credit balance P&L account. So, since they use the word reserves, they are treating P&L account separately. So, they are saying debit or credit balance in P&L. Means what? In the P&L account, profit for the year, that one. It could be negative. Means a debit, loss. That should be reduced. Then you add security premium. For the purpose of net worth, you add securities premium. See, securities premium is not part of free reserves, but it is part of permanent capital. It is definitely available in the company now. It is invested in the assets of the company. Therefore, securities premium account is part of net worth. And total of accumulated losses, deferred expenditure, and miscellaneous expenditure not written off. So this whole thing will be taken, right? So net worth will include all these things. Okay. No. I don't know why Sampath Kumar is telling sorry. There's no need. You asked correct question only. Sampath Rao asked a very correct question. And I answered it. Okay. Now, the gross amount of revenue recognized in the... Oh, you asked the person who asked that. Wait. At the end of the class, I'll take it up. Not now. The gross amount of revenue recognized in the profit and loss account. What is turnover? Because we are saying, turnover, 500 crores. What is the turnover? Gross amount of revenue recognized in the P&L account. So in the P&L account, top line, gross amount of revenue from the sales, supply or distribution of goods. Sales, supply or distribution of goods, or on account of services rendered. So whatever it is the gross amount of revenue recognized in the P&L account by a company during a financial year. So in the P&L account, profit and loss account, this will be the first line. If you see the profit and loss account vertical format, first line, that is why it's called top line. Okay, first line will be there. There is a top line. Now, some exempted companies are there, meaning certain companies are exempted from the rules, like banking company, non-banking finance company, housing finance company, certain other companies are specified. These are all exempted. Nothing has been specified as of now. They may. So these are all. Now you will notice that a mutual fund is not coming here. So the asset management company of a mutual fund is not coming here. Also, Nidhi company is not coming here. Chit is not coming here. That is why in the deposits of definition, they said any amount received by a chit company, any amount received by a Nidhi company, they exempted that. Any amount received by a chit company as chit by a chit fund company is exempted. It's not a deposit. So since that company is not exempted, so they are saying that amount is exempted. But if that company is taking some other money other than chit, that is deposit governed by the act, you are got. So only if you are a chit company and you are receiving any amount as chit subscription. What is a chit? Don't even ask me. It is a notion of a topic. Chit fund is a indigenous method of funding, where businessmen and ordinary people like me, we will all come together, contribute to the chit. Every month we will pay like an RD. Now, at every month, what happens now? Anybody who wants to take that money can bid for it and take it. It's a very, very beautiful method of funding, indigenous funding, which is there in India. It's a very peculiar form of funding only present in Oriental, especially India. You'll find it, and that too in South India, especially in Kerala. You will find it there in Kerala. It's called Kuri companies. Kuri companies, very, very popular. Even now they are there. Okay, chit fund and all. Basically, for indigenous finance funds, nothing great. Don't worry. Now that the backbone of the chit fund has been broken, now they are no longer a viable form of getting money. In those days, they were very, very powerful for small entrepreneurs and small businessmen. But today, banks are ready to lend. See, today, HDFC and Axis Bank are begging people to borrow money. So, personal loans and all. So, therefore, the need for chit fund also is gone. Yeah. So, just wanted to mention this. Yeah, these exempted companies can freely accept deposits. Agreed. But, my dear Mr. Suman Goyal, these companies are governed by a more stringent regulation that is called RBI guidelines. Are you able to understand? You are letting them out of this because it's like this. I am a constable. I have caught you. Baba, you are going to be caught by SI. Sub-inspector is waiting for you there. Go. So, I let him go here. MCA is letting him go because bigger fellow is waiting there. RBI. These gentlemen, banking company, NBFC, HFC, they are governed by RBI guidelines, which are even more stringent. So they are saying, here you don't come, go there. So that is why. So I hope I have answered this point. Other companies which are also there. So it's not as if they are not controlled at all. They are controlled stringently, more stringent than the deposit rules we are seeing. Okay. So that is why we are letting them go here. Yeah. Not only in AP. To my knowledge, entire South India, you will find chit fund companies. See, once upon a time, my father, in those days, I'm talking about 70s and 80s, late 80s, almost when I started getting into CA around 83, and by the time I became a chartered accountant, in 91, it was chit funds have lost. 97 was the death when there was a huge frauds committed by Easwari Benefit Fund and other Nidhi companies and chit funds and all. So Raipeta Benefit Fund and all in Chennai especially. After that, the RBI became very tough and they prohibited chit for some time. And then they said very stringent controls are put on chit fund companies. So now they are not very viable. 90s, post 90s, you find. But post 90s, what happened was banks became very friendly. Earlier, you had only public sector banks which were very unfriendly, which were customer unfriendly. Many public sector banks also started becoming customer friendly when they started facing competition from private banks. Like especially the financial institutions became banks. You had ICAI Bank aggressively, fighting in the market. You have HDFC Bank, and they started fighting aggressively against public sector banks. And very foolishly, the government continues to run public sector banks. I seriously don't understand what they're trying to do here. And State Bank of India. So all of them now they have become customer friendly. So they are going to the personal. In those days, getting a loan from a bank was impossible. Whereas chit fund companies were friendly and available in the neighborhood. Just go there, meet the manager, you start the chit, then 3 months later you say, I want money, he will take one chit and give it to you. The interest rate was very high as 24%. But I have no access to bank. For me, this is the best way. And he won't ask me any question. Just one, guarantee sign from somebody, take the money and go. Like that. And keep paying the chit fund amount. At the end of the period, when the entire chit is paid, that's all over. Your loan is repaid. That's all matter over. So that was a beautiful system. Okay. In fact, my father was one of the experts in that, where he has himself, advised the founders of easily 4 chit funds in the heydays in 70s. Chit fund companies. He was one of the people who knew chit fund accounting and chit fund management and all. So, but now it's gone. Yeah. Now, in the remaining 5 to 10 minutes, I will start this. In the next class, we'll finish it. So we have to talk about acceptance of deposits from members. Now we are getting into the procedural part. How to accept deposits, right? The first category is non-eligible. That is only from members, 73. Acceptance of deposits from members. Okay. Here also you have to pass a resolution in general meeting. Ordinary resolution has to be passed. Then you have to issue a circular to all its members, meaning you can accept only from members now. So you have to issue a circular to all the members by registered post with acknowledgement due or speed post or by electronic mode in form DPT1. So there is a format called DPT1 which will ask you to give all sorts of uncomfortable information, like what is your loan, what is your existing profit, all that uncomfortable information you have to give. Then they will also ask you to do one thing. Clearly, you have to put the deposits are unsecured and shall rank pari passu with other loan. Means the depositor should not get the feeling that he is having a secured loan. It's an unsecured. Like that, all that you have to give in the DPT1. And so the DPT1 should be sent as a circular to all the members. Along with the DPT1, you should also attach a certificate from the statutory auditor of the company stating that the company has not committed default in the repayment of deposits or in the payment of interest. So no default on such deposits accepted either before or after the commencement of the act. So that statutory auditor should certify this company has not committed default in the repayment of deposits or in the payment of interest on such deposits. This could have been accepted before or after the Commission of the Act. See, earlier, the same deposits, accepted deposits, was a single section in the Companies Act, 58A, that's all. The entire single section and the rules, that's all. One section and one set of rules, like that. Now they have changed it. Now they made it so many sections. 58A was a beautiful section. Rules were superb. The rules were very, very superb. My old lectures and all, I used to be very interesting because very clearly you can analyze. But now they have, as usual, in their own extraordinarily brilliant way, they have made it confusing. Okay, so in case the company has committed default, what to do? They can, if they committed default in repayment of deposits, a certificate from the statutory auditor that the default has been made good and a period of 5 years has elapsed from the date of making good. Elapsed means ended, completed. So if you have made a default in repayment of deposit with interest, then for 5 years you cannot accept deposits from members also. Unless once your 5 years is over, then you have to, at that time the statutory auditor to say the default has been made good. Meaning what? You have to repay deposit in 2022. You did not repay. You repaid in 23. You repaid in June 23. Then from June 23, you have to count 5 years. And once after completion of 5 years only, meaning something like June 28, then only you can go for acceptance of deposits. Got it? Now, a copy of the circular containing this statement shall be filed with the registrar within 30 days before the date of issue of circular. Note it, my dear friends, before the date of issue of circular. Then within 30 days, you issue the notice. Got it? So first to file, then. In addition to the issue of such circular to all members in the manner specified above, the circular may be published in 2 newspapers if you want. So the idea is the members can get wider publicity, one in English and one in vernacular, bring wide circulation, etc. Now, Suman Goyal says they can send notice by email. Absolutely, electronic mode, speed post or by electronic mode. Okay. They can send by email. So better to send by email only. In fact, the other day I went to the post office for some other purpose. Today, most post offices are operating as. See, you'll be very surprised to know the post office is a bank. In addition to delivering letters, they also act as, because there is a post office in every village. Am I correct? Almost every village, every taluk, you have a post office. So you definitely, your postman is there, postmaster is there. So they can also transfer funds. So there's a huge business opportunity at the bottom of the pyramid, which is aware, the government is aware, but because of the nature of the bureaucracy, they are unable to take it. What they should actually do is privatize it. That part of the post office business, if it is privatized and sold, government can continue to hold 40%. Give the balance to the public and professional management. Suddenly you will find post office is becoming one of the largest banks in the country. Really, it will give a threat to State Bank of India in terms of deposit mobilization, in terms of, because the trust will be there. And government can continue to be there, 40%. They need not go away. They can be 40% holder, control, but not 51. So that public can hold another 30 or 40. The balance can be held by QIBs and institutions and all that. It's a superb model. I don't know. Just like LIC, they can do this also. Not the postal department. The postal department continues. The banking part alone gets held off. And it will have a huge valuation. I tell you. Anyway, this is my view, not the view of the institute or the view of the Board of Studies. As a chartered accountant, I'm thinking it's a good idea. May work. Because I was surprised to see the bottom of the pyramid is huge. The people who know small savings, poor people like me who have very small amounts to invest. Post office is our best method of investing. Now, in addition to this, the company should also certify that it has not committed any default. Then 5 years has elapsed. In addition to statutory auditor, the company should also certify. Now, sir, procedure for acceptance of deposit from members, some of the provisions do not apply to private company. What did I say? They should exempt the entire private company should go out of this chapter. Private company do whatever you want. Like that they should say. Huh? Or they should say, private company is not covered, but if it wants to accept deposits, come here, something like that. Instead, what they are saying now, certain procedures will not apply to private company. Like what? Conditions with respect to issue of circular, filing of copy of circular with ROC, deposit of amount. We'll be seeing that a little short while away. We'll be seeing, just like we had for debentures, now you have to deposit certain amount, 15%. The same thing is there for deposits also. So that deposit and certification as to no default, etc., shall not apply to a private company which accepts from its members not exceeding 100% of paid up capital and free reserves and security premium. Accepted is not going to exceed 100% of paid up capital and free reserves and security premium, no problem. Now, Mr. Sampar, you might want to bring your private company into this thing. Sampatrao, you ask me now, how will private company borrow? Try to bring them here. Even then, they are not exempting. They are only saying these conditions won't apply for this kind of company. So you can say, boss, he has accepted 5 crore, but go correctly like that, you can say. That's all. But still, the remaining part will apply to you. The limits will definitely apply. Okay. Now, the private company, which is a startup, for 5 years from the date of its incorporation, it can do anything it wants. It can accept unsecured loan, do whatever it wants, provided it is a startup. See, any other private company means more than 100% of PC plus FR or not a startup, then you should satisfy these conditions. First, that private company should not be an associate or subsidiary company of another company. So it should not be an associate or subsidiary. Agreed. Then the borrowing of such company from banks or financial institutions or any body corporate, you have to total up. Borrowing from bank, financial institution, body corporate is less than twice its paid up share capital or 50 crore, whichever is less. Okay, many times, when some violation of company is there, I will think this exemption will apply. So I'll take the balance sheet and I'll take the total borrowings, come bank, financial institutions, if any, and other bodies corporate, total. And then I'll see paid up capital. So this will be more than 2 times. Or I will see if this is 50 crore, it will be more than 50 crore, whichever is less. But if you are able to satisfy this condition, then some of these procedures will not apply to that company. Altered in the repayment of such borrowings. Okay, provided. That also should be there. There should be no default in the borrowings. Right? So I'm going to stop here. Tomorrow we'll proceed with the procedures. But before that, 1 or 2 questions which Regala Sampatrao has asked. Out of context, private company having 2 members and since its incorporation filed income tax returns and not appointed auditor, then just company incorporated and operating, any consequence? Yes, sir. There are non-appointment of auditor is a violation, sir. When we come to chapter 10, you will learn this, sir. So you'll have to hold on. Non-appointment of auditor is a violation. So 2 members, incorporation has not filed income tax returns, not appointed auditor. Nothing done. So it's a defunct company. My suggestion, wait for, just to ensure that it is a defunct company and strike it off. Go for striking off. Okay, go for striking off. Rahul Sharma wants to know about pursuing LLB. Most LLB you can definitely do, but remember one thing. If you want to practice as a lawyer, you cannot practice as a CA guy. See, the Bar Council has no problem, but Institute is very jealous. If you want to be a full-time practitioner, then you cannot be a member of the Bar Council. No, you cannot parallel practice, you cannot do. You cannot practice as a lawyer and a CA. But there are many chartered accountants. You are in good company who have pursued LLB. But those are people who are specializing in income tax. They are authority on income tax. These LLB CA, there will be authority on income tax. Or they will be practicing lawyer. The CA only additional qualification. And the CA would help them to specialize in direct and indirect tax. So there will be leading practitioners of direct and indirect tax, that to appellate. They'll appear before tribunal, high court, so that like. So if you have such a goal in your life, then see you can do CA, and then you should be literally, income tax should be flowing out of your nose, mouth, ear, everywhere. You should be literally authority on income tax. You should become. So that means you should work with a firm which is specializing in that, or a lawyer who is specializing in that. And that is all. So if that is your goal, then LLB. Otherwise, for fun, no point in. I'm not an LLB. I do not specialize in income tax that way. I do original side. I practice income tax. I have clients. But the minute it comes to tribunal, I refer to a lawyer. I only brief him and I go with him. Up to CIT appeals, I will go. Tribunal also, I don't go. I will refer it to a practitioner who does it. Like that. So maybe if you specialize and you become LLB, I'll come to you and say, look here, I will know the lawyer, but I may be having 3 clients with criminal case, whereas you'll be having 35 clients or 300 clients. You'll be appearing in tribunal every day. If that is what you want to do in your life, do LLB. Otherwise, check it out. All see, A, B, C are alag-alag. You understand? I got your question. A, B, C are alag-alag, meaning A or B or C. But under C, all conditions should be satisfied simultaneously. Under C, all conditions should be satisfied simultaneously. But A or B or C. A is, madam, you are a private company, ma. You are taken some money from unsecured loan, etc., from your member, right? Only from member you can take. Okay, that amount will not exceed 100. That is total of your paid up capital and free reserves and security premium. Then they are saying certain rules are not applicable to you. That's all. Section number wise, I cannot answer, sir. Please. I may not cover it in detail. Don't worry. See, just because I'm following some order, don't expect me to cover everything. 73(2)(d) not covered. Go. What to do? Okay, like that. If you ask me, like, if you are auditing my class, I am failing my audit. Like that, I'm not covering. If I cover like that, you'll go mad. Don't worry. Anyway, I'll check up 73(2)(d) and I'll get back to you. ABC Limited holds 50% paid up share capital plus 1 share in XYZ. ABC Limited is holding company. Good question. ABC Limited holds 50% paid up share capital plus 1 share. Yeah, 50 plus 1. Wait a minute. I think it should be 51 or more. I will check up and get back to you, ma. 50% share capital plus 1 share. It's a good question. I'm raising my hand, Surendran. I can't give an answer now. I will refer to the section and I'll get back to you. You also refer. Does it say 50, not less than 50%, or does it say not less than 51%? If it says not less than 50% share also, it will tip the scale. 50% plus 1 share, it will be a holding company. But if it's 51, then you have to calculate 51%. In which case, 1 share more will not affect. I'll have to check up. I'll have to go there and see it. I will see it, and then 100% next class I'll get back to you on this. Good question, very interesting question. See, one more question is there. Suppose holding company is holding 10%. It has a subsidiary. Which is holding 50%. A Limited is holding 10% in C Limited. A Limited has a subsidiary called B, proper subsidiary. De jure, more than 51% subsidiary. Now, A Limited has a subsidiary B. That B Limited is holding 50%. A Limited is holding 10% only. Now, is A Limited a de jure holding company of C? That also you need to see the definition only answer. So this is my homework question to you. That is, A Limited, you write it down in a paper. A Limited, subsidiary B Limited. A Limited is proper. B is a proper subsidiary of A, no doubt about it. 51%. Now, B Limited is holding 50% of C. A Limited is holding 10%. Now, is A Limited a holding company? Please note, B Limited is not a holding company of C. Because only 50. Okay, to be on the safer side, B Limited is holding 40%. A Limited is holding 20%. A 20, B 40. So, this chain subsidiary won't come because B is B. But B is holding 40. Holding company is holding 20. Will A be a holding company of C? This is my question. Okay. If it says more than half, beautiful, Rudraj. If it says more than half of the paid up share capital, then 50% plus one share is more than half. So, to answer Surendran's question, XYZ Limited, ABC Limited is a holding company of XYZ Limited. Okay, good. Good show. Thank you, Rituraj, for that input given by you. Also, check up. Very interesting questions. I think this time in the exam also they have asked holding company, subsidiary company. One question, I don't know. I don't read all this because, see, I'm not a professional coaching teacher. My BUA doesn't come from this. I am a practicing CA, corporate trainer and all. I teach because it gives me satisfaction. No other reason I teach. I mean, whatever the institute pays me, I'm happy to receive. I'm not a overall coaching. I'm not a coaching center guy. Enough, yeah. Saraswati is there. She has blessed me. So much she has given me. Why I will sell her? Never. Okay. As a teacher, I give it to you. Take it. Very good. Excellent. We had a fantastic class and good questions were asked. Thank you for your patience with me and my idiosyncratic behaviors. And looking forward to meeting you on 16th, inshallah. Bye.